Good morning, Steve Reed with the morning grain comments. Markets are mixed with beans now down about 9 cents. Soybean oil continues to gain on soybean meal. Corn down 2, while wheat's up 5 cents. Outside markets, stock market is kind of mixed right now with the dollar higher, crude higher, and the metals are lower. As far as overnight news in the grains, I think in the beans, concern about declining demand for U.S. Bean exports and favorable South America weather could take some price premium out of the soybean futures markets. I think that Argentina is finally going to get some rain next week. Brazil conditions are pretty favorable. And for the meal market, the U.S. culling the poultry herds because of bird flu weakened yesterday the meal basis, which weighed on meal futures below some support levels. Soybean oil continues to gain on the lower NOPA soybean oil stocks. Talk about increase in renewable fuels, the green fuels, and palm oil is following the higher soybean oil trade. Corn market leaking lower. Some people feel that the exports is offering resistance to the marketplace. We still see favorable South American weather and lower prices, and a lot of uncertainty as for the Ukraine export down the road, if the corridor will be reopened or extended. And there continues to be drone attacks on Ukraine infrastructure. I think the markets, both corn and wheat, needs clarification on what's going to happen to exports out of Ukraine. In the wheat market, very volatile market, almost makes risk management impossible. You've got some showers forecasted for the southeast portion of the U.S. southern plains, but after that it's going to be dry. Australia is getting too much rain, which is reducing the quality of their wheat to more of a feed grain wheat. And Minneapolis is responding to that by showing some strength relative to Chicago and KC as the world might begin to seek protein wheat. Again, the biggest thing about the wheat market is what will happen to Russian exports and what will happen to Ukraine exports as the war rages on. Still looking for the Fed to increase interest rates, which is positive to the dollar, negative to commodities. And we'll be watching down the road consumer demand as we get closer to the holidays and the end of the year and what impact that might have. Funds continue to be willing sellers of commodities due to increased chances of a U.S. recession. Have a good trading day.